Good morning. Welcome to another episode of Game Tactical Tuesday. This morning, we're joined by our special guest, Isabel Uribe, who's going to talk about smart tax strategies, how to keep more of what you generate. Because there's two parts of this game, right? We focus so much on the front end returns, and yet when we don't have education on the tax side, like we really limit ourselves. And that's maybe one of the most important parts of the entire game. Isabel leads Grid Women's Investment Network, which is a Grid chapter focused on empowering women investors in the DMV, the greater DC area. She's also an investor herself, and she's going to be talking about practices that she is using and optimizing and putting into place herself. I talked to her recently. I said, "What are you doing?" And she goes, "I have really just been going deep and studying and learning as much as I can and putting myself in rooms to understand these tax strategies." And so I'm excited we have you on here to share this with us. If you are on the call, tapping in, drop your location in the comments, right? I have got so much business and networked so much from showing up to calls just like this. I built a national network by being a chatterbox in the comments and connecting with people and hitting them up offline. All right. And Isabel, what do you want to talk about today? What's going
Well,
on in your world?
thank you for having me here. This is a great. It is great to be talking to you and to everybody here.
Can you tell us a little bit about give me a little bit of background. What got you excited about investing? Where did that like bug of and real estate and like how did it bite you?
So I mean, I started as an agent 15 years ago. I started, and I was lucky enough to get into Casa when I just uh, got my license. And Casa was has always been very investor focused. So I had it in the back of my mind. I was always, I was attending grid and yeah. So I was attending grid and I was doing it for my clients. I was trying to help them invest, but I was not doing it for myself until I get a deal that was like way too good to pass on, or it was just amazing. And I went to Rob and I'm like, "Oh my God, this is happening." And he's like, "Get it." And I'm like, "Oh, I don't have the money." So see, he's like, "I'll give it to you." And I'm okay, okay. I need to put one foot in front of the other. And that's how I started. And it was an amazing deal. I made $200,000 from a wholesale deal. So definitely was something that I was very grateful for. And
And you can
and
too. We should all start wholesaling tomorrow. They're all that
yeah,
easy, guys. That's where
yeah.
that's no. I love that story though. That's amazing.
Yeah, yeah, yeah. Anyway, but the thing is, that year I started doing well, like, and what happened is that I was hit with a very high tax bill, and I was like, "Oh my God, how am I gonna do this?" And the thing is, I didn't realize before is that the IRS is taking between 35 and 50% of our income, in if you don't pay attention.
Okay, can I ask you this? Because I know I always like to speak for the little guy. I know I'm the only one on the call here that hasn't made $200,000 on the deal. Not you guys. But like what, yeah, I can imagine that might change my tax bracket. So is that was
Mhm.
that like a big jump? Like, is that where we're seeing that 35 50% when I'm getting short-term capital gains tax
Yeah,
on a
and
$200,000
I
deal?
mean, if
Yeah.
you put it all together, it is 40%, or sometimes it's 50, which is, I mean, it is scary because basically it's your highest, um, I don't know, like expense.
Hmm.
And because some people say like, "What's your highest expense?" And like, maybe my children or my house, and it is not. I mean, we don't realize that the IRS is also a very high expense. And I mean, it's a good problem to have, and thank God for I mean, I do see where the money is going to when I pay to the IRS. I do see the benefits of, the roads and everything they do for us, and education for my daughter. Like that is a good thing. But there's also some other places where I can put that money in, where I will be
Can I give
like,
you a disclaimer? Can I give the
yeah, yeah,
disclaimer
yeah.
for Isabel, right? Because we know, like, there's different perspectives on this. Um, there we go, Tim. Taxes are theft. There's different perspectives on this, and I would say, no society has ever existed without. Right?
Hmm.
Anyways. There is a tax code. The tax code does have incentives where they incentivize certain behavior. If you look at the way legislation gets passed, often initiatives, right, are reflected in the tax code. Instead of allocating money directly, they will create tax incentives or tax exemptions or
Yeah.
something to fund initiatives or to encourage growth or right. We've seen this over and over again. So knowing the tax code, using the tax code to our benefit, right, as investors is just a vital
And
part of being financially literate.
I was going there because I didn't see it that way. I saw it again as an expense, as something I had to pay, and I didn't see it as the opportunity the government is creating for us to invest. The fact that we can use that money in order to make more, to build our own wealth or to build someone else's, like I think it's an opportunity. So it's something that they are creating so we can become more wealthy. And I think this country is built on that. It's built on the incentives the big fortunes that have been like around since forever, the Rockefellers, and like they all started with this, taking advantage of the tax code that was put in place since then. And the thing is, because we don't know about it, we don't take advantage of it. And so I think it's just a missed opportunity. That's what I think. It's there and it's available for everybody. But historically, you wait until you have a lot of money in order to put this in place, in order to actually know something about taxes. And I think that's where the mistake is. Because if I had known this before, I wouldn't have done many of the things that I did, and I wouldn't have just like blindly paid, because I didn't know. If I had put these strategies in place, it would have been a completely different story.
Mhm. I love it. Was there something that was an unlock for you, like in terms of opening your eyes? Because you mentioned Grid is an investor community around the country, and you were in a real estate team that was focused on this, right? And one of the topics we always talk about is taxation, right? Because that is like we're talking about it this month in mind, how to 1031s and bonus depreciation and cost segregation and qualified opportunity zones. And there are tax incentivized structures. Everyone is taking advantage of a tax incentivized structure if they have any kind of retirement plan, 401ks and IRAs, and right, the
Hmm.
government wants you to go invest in I love it, real estate too, invest in your retirement so not everyone's on Social Security alone, right? Um, was there something that was like an aha to you? Was there a book or a speaker or an event that really unlocked some of the stuff we're going to talk about today?
So, two things. Those concepts, I was listening to them for since I started as an agent, and they were kind of like, oh yeah, it would be nice to know about that, like.
Mhm.
But when this happened, when I was like, oh my God, I need to pay all that. That is a lot of money, and I'm not even sure if I can afford it. That what happened is that uh, it was on the back of my mind. I always kept thinking, I know that wealthy people have very good tax strategies. I know that. I know that. What can I do? So yes, I did read the cash flow quadrant, and that kind of, I was like, oh my God, uh, I, this is a big opportunity for me because I am in the investor quadrant and I want to stay there. So my opportunity to actually change this is now. so so what happened is that I got really interested in it because I was like, okay, I know that that wealthy people pay less in taxes that I do. What do I do? How do I put this in place? So I started
Mhm.
getting into courses with CPAs, but they were specific for real estate. There were, and I got kind of obsessed for years. um, yes, I think it was kind of like, I don't know, I needed to know more and know more. And what happened is that at the end, I kind of like, oh, it's easy. It's kind of like playing a game. It's just following
Mhm.
those rules that are written in the tax code that I didn't know about. And it was just kind of like a peace of mind that I knew what I was doing. And that was definitely different.
I think that's fantastic. So
Can I comment on that real fast? Just a
Oh
please,
yeah.
quick comment, right?
yeah.
The comment is, when we teach like our 7 level framework, one of one of the pieces in the investment section on level 4 is unveiling the dragon of ignorance. There's like this, like, oh, that's for other people. I hear it, it's in the
Huh.
back. I know that's like I should probably do it. But until you kind of confront it and say, like, I need to learn this because this matters for my family, this matters for me, this matters for my future, this matters for my clients, and you confront reality there, you actually kill the dragon of ignorance, right? And you realize, oh shit, this is actually really
Uh-huh.
easy, right, Isabel?
Uh-huh.
It's just you just have to focus on it and take the time to learn it, and then it becomes freeing, that you realize it's not something to be afraid of, but something to like embrace and be like, yeah, this is a game. This is a game
Uh-huh.
that we play and that we could all play. And then I could teach other people how to play the game, right? So
Yeah,
that's
and
my comment.
actually, yes, but what you that is very important. Hi, by the way, I didn't know you were here.
Yeah.
Uh, so one of the things is that I think for me to look at it as a game changed the entire thing, because it's like, oh, I know how to do this. I know, I know. It's just because I hated accounting when I was a kid, when I was in college, and like I was like, I never want to see this in my entire life. So when I started learning how to apply those things, that was a completely different um, mindset that was coming from. I was coming from, okay, I need to learn this because like you said, Rob, is it's important for me, it's important for my family, it's important. I need to put this in place. And I don't know, I just looking at it as a game, because it is a game. Like, it is very impressive how there's some rules that are written in the tax code. It is kind of like a game. So if you
Can,
learn
can
to play
I,
those
I want I
rules.
want to give you some real practical advice on this as well, right?
All
I
right.
remember when our daughter was um, she's 12, she's 13 years old. She was going through challenges, ADHD, auditory dyslexia. There was like these things that she was like having challenges with. And um, and it was really hurting her and stunting her in a way. And we needed to get the right help and support to help her right through that process. And we put her into a school, a charter school. And I remember thinking, there's got to be something in the code, the tax code, that can help with this, right? And there was. I found in the tax code
Mhm.
where if your child has this diagnosis and you could prove it, right? We did have all these tests, then you can write off a portion of her school, right? To help her. And that school was amazing for her. She blossomed. It was like the best thing in the world. And I had the ability to deduct that. And it wasn't a CPA telling me this. It wasn't anybody, because they didn't understand my
Mhm.
circumstance. I had to go seek the information, right? And by seeking the information, I was like, damn, how, and by the way, how big's the tax code? It's like,
Yeah, yeah.
right? And the tax code is there to help you understand how to unlock some of these different parts of the game, right? And by the way, with ChatGPT now, game
You
changer.
learn a
So
bit
anyhow,
faster.
Yeah, yeah.
Yeah,
I'll
but
let you guys
that is
take
important
me off the
because
main screen, Justin. Let her do her thing. So
but that is important because I think that so you prove that is ignorance what's keeping us from doing things. It's not that it's not written in the tax code. It is written in the tax code. It's just us that we don't know what's going on there. So that's basically what what happens in even in real estate is like we don't really know what's going on. And I mean, I wish I knew from the beginning, but I mean, we just don't know. And I think as agents, the fact that we don't know hinders us from actually becoming like a good advisor for our clients, and not only for ourselves but a good advisor for our clients. I think once we know what's happening, we can definitely help them way better, yeah, in a much better way.
So I love this, and I was like setting the stage, and I think it's important for people to understand. We talk about the 7 levels of wealth of who we are and why we are, and just we'll say the when you look at this game is all about compound returns. When we can increase our returns, right, it increases the ability for us to get financially free. And I know you want to be on this call. I know the kind of agents that are here that are fiduciaries that care about other people, right? When we get financially free,
Mhm.
we get the resources to help other people become financially free. So let's start. I am on this call. I am in your shoes, Isabel. I don't understand a lot about the tax code. That is something I'm gonna get to next year, right? I'm building. Where do I start? Let's
So I
let's
think the
let's
most
walk
important
through some strategies that you want to talk
I
about
think the
today.
most important thing is to understand that that you can leverage this. That is just not something that like a tool, is actually something that you can build your whole business on, in your whole, I mean, life around. Because when you have the right structure, it's not only about like, okay, I'm going to do this as taking advantage of it. You can build your whole I mean, life and business around that. So when you grow, everything is structured the right way. uh and so that is one of the things that is, I think that's the most important thing. The second thing is uh we need to understand that we have that we there's two of us all the time. It's the person that we're right now, and the person that is going to be there when we retire. And we can start investing for that person as well. One of the things that was like blew my mind back then was that, okay, everybody knows that they have a retirement account and they can do something. Oh, that they it's just sitting there, it's just sitting with in a 401k. We cannot do anything about it. That's how I learned about it. We cannot do anything about it. 401k is there, and that's all right. But the thing is, if you do understand self-directed IRAs, you know that you can take some of that money and invest it in the stock market, and or invest it in real estate, of course. But my point is that it is your money, and you can actually manage it. You can do many things with. You can make it grow, because if you just let it sit there, you're not going to become any more wealthy at the end of the day. And I don't know if the 3% that the 401k is giving you will be a lifesaver back then. So that's so that's the first concept that for me was like, okay, this is me, and then it's future me, that I need to take care of both parts and to make that grow. And the thing is, future you can invest tax free. So if you're going to become a hard money lender, if there's, or if you, even if you want to buy a property, there's rules around it. But if you want to become a hard money lender, it is easier and more profitable if you do it from that money, if you do it from your future you, because you're not going to pay money, you're not going to pay taxes for that money. It's going to be tax free if you do that.
So we're talking about another way to talk about this is we talk about this on the call. you have a cash machine and a wealth machine, right? Me right now, I need my cash
Uh-huh.
machine running because I have to live on my cash, but am building a cash machine to fund a wealth machine, right? Which is and that's future you. That is my wealth machine. That wealth machine should be tax advantaged. I'm going to retire off of that. I need to protect those returns. So for most of us, this is an agent focused call. My real estate sales business could be my first cash machine, right?
Mm-hmm.
That is spitting off excess income that I could invest, and then I need to be investing into a wealth machine because maybe down the road, you're right, I am a hard money lender, or I'm a landlord, or I'm
Mm-hmm.
doing what Aaron did, and I own a short-term rental portfolio or something like that. Great. So I've got that consciousness. I got the cash machine side. I have the wealth machine side. Totally makes sense. What's next?
Okay, then let's talk about, so that is the future you. And then let's talk about what you can do right now in order to take advantage of the tax code. What I will do in order to start will be right now, in 2025, will be to have a short-term rental. And it is very, because I mean, for everybody that doesn't know, the tax the fiscal bill that was just passed in July came and got back our
Bonus
100%
depreciation.
depreciation, bonus depreciation. Yeah. So short-term rentals right now are a huge thing. The way the IRA treats as our short-term rentals is they are not passive income. So uh, they're not a rental that you buy and hold. If you buy and hold the property, you need to be a real estate professional to the eyes of the IRA. So you have to have certain hours, of your year that you work on real estate in order to
We're talking
qualify.
about the designation as a real estate professional. So like
Exactly.
we as realtors, many of us are automatically going to be designated real estate
Uh-huh.
professionals. There are
Uh-huh.
tax incentives that come with that.
Hmm.
And for the investor on here who's not an agent, right? The short-term rentals are a good vehicle to open up that designated real estate professional because it's considered an active management rather than passive management. So it's easier to qualify, and as the income is considered differently. Tax-free wealth is got some really good basic primer on some of these concepts. Yeah, sure. So you are
Yeah,
looking
and
at
even
short-term
if I
rentals
am,
right now
uh,
for bonus depreciation as well as like the cost seg and yep, the
yeah, even
write-offs.
if I am an agent I mean, it is way easier to start with a short-term rental. And
Yep.
also, the important thing to know is also that you probably don't need much money to start, because eh, the way to do it is to start with the BRRRR method, in order to, you get money from a hard money lender, and then you renovate that property,
You
and then
use other people's money to buy assets to create a long-term hold that you refinance out of. If I'm looking at this call though, and I see a bunch of DC names, and then I see some guys that I know, and they are not starting out. They've got income. They've got high income. So if I've got what's some of what's some of the stuff you had to do when you made 200K? What are some of the
so
advanced? I see the chat popping off with some self-directed IRA versus solo 401k. So if
so yeah,
first
definitely
buy a
put
portfolio.
some of that money, of your retirement money, into it. And if you
Mm.
become a hard money lender with that money, you're just going to put that back, instead of with the 2% or 3% that the 401k is giving you. You're gonna put that back in a 12% or whatever you agree on with the hard money lender.
So,
So that is
so hey, I'm
that
gonna
is something.
buy an income producing property, and then I'm gonna put that excess income into a self-directed IRA that I could use to lend out the private money, or
Hold on.
just I'm gonna
So
fund a self-directed IRA to use the private money. Is that what you're saying on the hard money
yes,
lender side?
yes,
Okay,
that's what I
so
think. That's
I'm
so
gonna
you
do a
can make it grow.
contribution. Yep.
without but that is already coming from your retirement account, so you don't mix both things, because
Yep.
if you mix both things, the IRA is going to look at it saying like, okay, this is weird. If you everything that coming from your self-directed IRA has to go back from your self-directed IRA, and you need to manage everything from that money has to go back and forth to that. So your present you cannot uh run anything with a self-directed IRA,
Yeah. You can invest alongside. The self-directed IRA needs to invest in independent investments. And
Yeah.
there's some really
So
good on the Grid channel. There's some really good breakdowns of how to go invest with your self-directed IRA to get into the nuances of it, because we could spend over an hour just discussing that right now.
yeah.
But
But
basically,
I
just
mean,
know if you have a retirement account, you can convert it to a self-directed
mhm,
IRA where there's a custodian. You could direct that custodian to make investments. One of the easiest investments you could do is like a private lending investment. You could invest maybe in some syndication. There's some things you could do
mhm,
with that
mhm.
self-directed IRA money. And
But
then the
this is
returns all go back into the IRA, the
mhm,
tax advantaged.
exactly,
Yep.
exactly.
Cool.
So that is one of the things that I think is just making you money in the long term, which is perfect. So if you so in order to if you need to start right now with, let's go back to the short-term rentals. I think the short-term rentals right now for anybody, for agents, for not for anybody, are a huge opportunity, because again, the way the IRA treats them is that they are not passive income. If you own a property that is just you hold it, it is passive income, unless there's unless you're a real estate professional. But if you are not, and you're doing anything else, you can have a short-term rental, and there's rules around this. But the thing is, the way the IRS looks at it is that it is your business, so it treats them like active income, which is a huge advantage in respect of the of
Mm,
taxes, because
got it.
that is the big difference. That self-directed I'm sorry, that short-term rentals are not looked at by the IRS, by the IRS, like a rental. They are looked at as your business. So that's why this loophole, that they call it loophole, it is not a loophole, because it's completely written in the code, and everything is just completely
You're
legal.
talking about the short-term rental loophole, basically.
Yes,
It's why everyone, it's the new having a realtor spouse. You had a realtor
exactly.
spouse, so you can have the tax designated professional. That's why you see so many doctors married to realtors,
Uh-huh.
etc. Right? Now we've got, hey, I can go buy a short-term rental. They teach it all over the place. And that income coming from my short-term rental is active income. It's taxed at a different rate, a lower rate than a passive income, right?
Exactly. Not only a lower rate, if you do use, so if you buy the property and you do use a bonus depreciation, you do a segregation study, you do bonus depreciation, so the losses that you can reflect on that year could be either like the same amount of the money you're making as a doctor, or or it could be even bigger. And if it's that, then it's reflected as a loss on your tax bill. So you're basically not paying any taxes for that year. So I think it is very important to start there. I think that's what I recommend, to start there, and then I mean, and of course it has to be done under the right structure. You need an LLC for that specific property that you're buying. I would recommend also to do another LLC for each property you're buying, and then after that, after you already have maybe 3 or 4, then start an S corp. because you're making, then start an S corp that's going to manage all those properties. And the idea is to start building, and the reason why is because you can pay yourself a salary, and again, that tax wise is it's better that just start. Keep getting just the profits from the LLC. So because then you're making money on that salary. So I'm sorry, you're muted.
So the S corp rather than the LLC for tax purposes, I've heard a number which was that I need to, for tax reasons, like about 100K was the threshold at where it made sense to switch over. Different people from the LLC, just because there's a cost with running the S corp every month and
I
filing.
believe
It's
it's I
every
believe
year, I
it's
mean, and
50,
filing.
but yeah, I believe it's
Yeah.
50, but the structure that I recommend is not only to become your LLC, is not to become an S corp, is just to get another entity, an S corp, in order to
Mhm.
manage those properties. So everything,
Got it.
so it's going to be the managing company. That's what it is. It's just so the LLCs don't have a bank account anymore. Everything is coming from the S corp. You know what I'm saying?
Got it. So yes, an S corp is a management company. So instead of you just taking straight profit from each one of those individual assets,
Hmm.
you're paying yourself as a manager performing those management tasks.
Hmm.
Active income.
And about asset protection, it works much better, because then
And
you're
I see. And then you're engaged by the LLC. There's
hmm.
there's a relationship there, right?
Hmm.
Because different than if you get big enough and you own a property management company and you also have to manage some of your assets that is bigger than just me and you moving money around. There are different
Hmm.
corporations that own P&Ls that have to
Hmm.
balance so that profit becomes a legitimate expense, right? Someone's got to manage those assets so
Yeah,
that salary I'm paying myself
it's a salary.
is an expense that I am running. Yeah, that makes sense.
And then you, as the owner, you are being paid a salary. It's not about the profits. It is because the taxes are different there. You're paying yourself a salary that has to be, like a like a good salary according to your way of life. It cannot be like $30 a month. It has to be like something decent, and then you're paying taxes on that money. So
Love it.
the point is that the point is that you can start really small. You can start with nothing. Again, if you want to buy a short-term rental, you can get a hard money loan for that. And with that, you can start making your money grow. Both in the cash flow part, of course, because that's what it's a business, you want that. But also you can also mm, structure everything so you are using the money that you will pay on taxes in order to make your business grow.
Awesome. No, I love
Yeah.
that.
So, and then after that, like you can make it grow. And then if you're going to sell one, of course, you're going to use a 1031 exchange. And then, the idea is to use all these things that are already in place in order to start building more wealth.
So just layering tax deferred or tax incentivized strategies, like a 1031
Exactly.
exchange, which allows us to defer taxes again to a future point, right?
Hmm.
So we're getting the benefit of 100%, reinvesting 100% of our returns and dealing with the taxes later, and not reinvesting 70% of our returns because the math is very different.
Hmm.
Added over
Hmm.
time. Cherie, what's your question?
Hey, girl,
Hello. Hi, Diva.
how are
Um,
you?
I am good. Excellent conversation this morning. I am curious if you have identified yet, like initially you said that our taxes are 40 to 50%, especially for high earners in this
Mhm.
industry. Have you identified like what the tax reduction would be based on your strategy? So, instead of it being 40 to 50% of your earnings, we can get it to 30 to 35% of your earnings, or 20%. I was just wondering if you had
Well,
done any research on that.
it depends on what you're putting in place. But if you start with this, if you start with the short-term rental, and if you start, doing a bonus depreciation, it could be zero, or maybe 10% or 15%, because that's usually around those lines. It could be
That's huge
10 to 15.
savings.
It's
Yeah.
huge savings.
So for
That's the
somebody
point.
with a $250,000 taxable income,
Hmm.
that could go down to $25,000, for example, in
Yes,
taxes,
exactly,
which, yeah,
exactly.
yeah.
So, and that is, thank you for bringing that up, because that is one of the most important things. We, or at least I, didn't realize how much money it was, and it is huge. It is absolutely. I mean, it's mind blowing, and it's not only money that you can put back into your business, because I think that's what you should do. But it is just money for you that you can use for other things as well. Because when you're talking about bonus depreciation, is money in your pocket that you are not paying to the IRS. It's not that you have to reinvest it. No, it's losses that you are reflecting in your pro forma. So yeah.
Glenn, you had your hand raised, and I know you were. I like what you said about tax stores and going through these. Yeah, what's your question? What's your comment?
Yeah, good morning. I really appreciate the conversation. What Isabel is describing is something that we need friends to do, right? You can figure these things out on your own. I just spent 3 days with John Heyer and his tax strategies, and the things he described are absolutely unbelievable. But to get to the more advanced strategies, you need a guide, you need a support team, bookkeepers, whatever, to do this. So, Isabel, who in our network do we know locally that is knowledgeable, specifically in real estate, in terms of business entity structure, and then the tax implications, and then maximizing those? There are probably a few names. I've asked several people and just can't come up with names and numbers of people they feel they trust and they like. And I've had to go national, but that's tough because I'm competing with thousands of people with a lot more money than me for their time. So, and it's not cheap. So, do we have a local network of folks that we can tap?
Well, I'll be more than happy to help you, Glenn. That's what I do now. I so the way this has happened is that I started advising other people, and yeah, it was kind of expensive, like you said. Um, and but I so when I learned all this, I started advising my friends, and they were like, "Oh my God, this is crazy! You're saving us so much money. Why don't you do this?" So I started advising other people. They recommended me other people, and now what happened is that I thought, well, I would have loved if this had been explained to me when I started, because it's crazy that this is just information that is available, and I didn't have it. So I put together a course, and now I'm teaching these on that course. And I mean, I would love it if you join me, because yes, so it's a course, it's a community, and I also have a lot of people there, um, that I recommend to work with, because I'm not a CPA. I just tell you what has worked for real estate specifically. And what happened with some CPAs, that it has been really hard for me to 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 get to the point where I don't think, I mean, let me say this correctly, because I think CPAs are amazing, but they are not necessarily there helping you build wealth. They're there to get you out of trouble. Or, I mean, not even get you out of trouble, like so you're not getting in trouble at all with the IRS. So I'm super grateful for them. But I think it's important for you, like Rob said, to learn these things on your own, because that's the way you're gonna be set up for success, because it is written there. So if I can help you, I'll be more than happy to leave this. I'm gonna put here the
You
the
drop,
link
you
to
can drop
the.
all your information in there.
I will.
And
So let me tell you, I have this webinar coming in order for everybody to know about this. It's on Thursday the 9th, and you're more than invited to attend. I'm gonna leave you here all the information. If you can register, I'll be in touch with you so you can get in there.
love it. Thank you. Appreciate that. And I think here's one thing to think about. I think Rob said it well, is it's very hard to take a client
Hmm.
on a wealth journey unless you go on a wealth journey yourself.
Hmm.
So we've got an obligation to go on that, right? To educate ourselves. I can't recommend, I think Tax-Free Wealth by Tom Wheelwright is one of the
Hmm.
best
It is.
books that I've read on the topic. I had, I got to go to an experiential MBA run by Chris Suarez, runs Place. Place is a $1 billion home services company. They sold 12% of their company to Goldman Sachs for like 116 million. And, Tom Wheelwright messages us from this boat he's on, whatever, so we can have a conversation with him. But I think in terms of all the content that I've read, the level that it's written on, and explaining these concepts and how they just fit in a basic way to each other, I think it is a great, just simple way where you can just get conversant with, oh, okay, that's what bonus depreciation is, and that's what the
Hmm.
adjustable is, and that's what paying your kids is. You're here at
Uh-huh.
some of the basic foundation level, because it can get so easy to get lost in the nuances of each of these tactics, which I appreciate that you've told a narrative story, Isabel, because so often it can get into, our high C's on the call start geeking out because this is very simple for them. They're doing the math in their head of
Yeah.
of some of the nuances, and it's like, well, the other thing I think it's important, and maybe we could talk about here, is it's being intentional about where you want to end up future you, because it is going to affect the tax structure and the decisions that you make, right? Not everyone will want a trust. Not everyone is going to do
Hmm.
infinite banking and overfund whole life insurance, right? When I
Hmm.
talk to young people, I was talking to my brother yesterday, and I was like, "Are you maxing out your?" He's 27. I was like, "You maxing out your retirement accounts?" I was like, "Start there. Like, start just maxing out." You know, Everyone that comes in grade that's in their 20s wants to wholesale. I started talking to them about the IRA. I was like, "Bro, if you just did that, you will crush the majority of America. An index fund at your age, just putting some money in, like, it will crush anything you're gonna do. Like, and then do some crypto, whatever the heck wholesaling you're trying to do will pay off." Because I know you have the benefit of time on your behalf. So, what are some of the biggest maybe myths that you see out there that you kind of opened your eyes to since you started looking into this? Is there anything that especially jumps out to you, like some common
So
advice that's given that you think is not accurate?
some common advice I was giving. I think it's just, I think one of the things that it's there since we're born, basically, that we are taught in school and everything is just, you know, get a job, make money, and period. Like, uh, I do believe that at some point you need to stop and say, okay, if I do get a job and make money, I'm not gonna be wealthy when I retire, or ever. It's just never gonna happen. So I think the biggest mistake that we are giving children and around money is that they are not prepared. They're not, this is not taught in schools. And I think everybody's going to have to deal with taxes in their life. So yeah, I think that is one of the things. I think it's, and the way we look at money is kind of like, it is not looked at as a tool. It's not looked at as something that can make you produce more money, and that is also something that is a mistake. I'm not sure if you were referring to that or you were referring to something more practical, but I think that is the biggest. Yeah, I think uh, it's just,
No, I
as a
love that.
society, I don't think we could look good at, and even taxes, I don't think we look at this as the way we should.
No, we have an education system. If you want to read some interesting stuff, go read John Taylor Gatto talking about the history of compulsory education in this country. You know, the human farmers rioted when they made their kids go to school, by the way. But and to design a workforce. It's a Prussian education system, you know, to design an employee-based workforce. So when we have people taking employee actions, that's the outcome of the educational system.
Hmm.
That's just
Hmm.
what it was designed to
And
do. Yeah.
and right now, the system, I mean, this is like not completely on topic, but right now the system is educating children for jobs that are not going to be around when they grow up. So we definitely need to help them understand how to build wealth on their own, because AI is there. So I'm not sure that they are being prepared for that. I don't think we are, but at all. But I'm talking about them that are going to start. Like I have a 10-year-old daughter, and I'm not sure that the education she's getting at school is preparing her for what is going to be out there, because we don't know.
Mm-hmm. No, I
Mhm.
think that's that's fantastic. So what can you drop your course? And then
Yeah,
I
of
saw some
course, of
chats
course.
here. I love this. Jeff, if you want to unmute, I love for you to expand on that insight. That was a great one. I'm glad you shared your myth, right?
Talking about
You
the
said that your myth it
talking about the
was that
solo for the retirement money. So if
yep.
you use your self-directed IRA into a deal that's got debt leverage, you can end up with 38% tax owed from your retirement account. And that specifically hit me hard
Yeah.
about 10 years
Yeah.
ago. And so that's when
Let's frame that. So what he said was my myth was if I invest into my IRA, I don't have to worry about taxes. That was his myth. And then he found out, oh my
Mm.
gosh, I'm investing in ways that I really have to worry about
yeah, my
taxes.
retirement account ended up having to file 990Ts, which is similar to what any non-for-profit would have to do. And then we had a big tax bill just for my retirement, which felt ludicrous at the time. But again, it's like playing a game. Once I learned that there's a strategy to avoid that and still use debt leverage in my retirement, not only did it make my input levels from 7,000 a year up to 67,000 a year, it also made it to where I didn't have to worry about this debt leveraging into that retirement account.
Yeah.
Yeah. No, I love that. You know, Jeff's local is coming to talk to us about some creative financing syndication strategies. Go check out if you search Jeff Young, great investor, it'll pop on YouTube. We can send that out, but it was a great one.
Yeah,
And then Tim had some stuff to say
one of the
as
ways I
well.
was able to take advantage of bonus depreciation was not necessarily doing it myself. With a group, and I made an investment of 125,000 last year. And in year one, I had $84,000 of depreciation that very first year, and that goes
What
against
year was
all of
that?
my income. What's that?
What year was that?
It was actually 2 years ago, so it was 23. So it would actually be higher if it were this year.
Yes,
But
exactly. See,
all of those, it covered my entire year of active income, plus some of the passive activity losses rolled forward to affect my next year. So it's
it,
amazing to see that happen.
it is, and that's the point. People don't know. They're just
Tim,
uh, they
Jeff,
don't
what were
know.
you doing? Tim asked this as well too. Jeff, what were you doing that incorrectly that where you had this giant tax bill?
So I don't think it was incorrect. I was using my self-directed IRA to invest through a syndication. So for the
Mm.
$100,000 I put in, the syndication went out and bought a huge multifamily project. Now my $100,000 got leveraged, meaning I was using other people's money, which is what you want to do. So I had another $70,000 to $100,000 worth of debt leverage there. Then they did a refinance, so I got back most of my $100,000. So now my debt finance is this much. Well, when they go to sell it, anything that's debt leveraged against your retirement actually plays in to this unrelated debt financed income. So UDFI.
And you have to pay interest on that.
It was 38%. It was not interest.
Yeah.
It was an actual tax from my retirement account that I had to file and completely do that with. That's because it was under an individual retirement account. If you set it up as a 401k, then you've got it under an employer. Because it's under an employer account, it doesn't face that at all. So once I realized I'd made that mistake, I wouldn't even call it a mistake. It was just a good problem to have these huge taxes, but to realize that there was a way to avoid that and keep more of that ball rolling forward. I was able to move that over into solo 401k. And again, it increased what I could contribute every year directly up to 67,000. Well, now that I'm over 51, now it's 72.5 or something. So I can contribute more. Plus I can take that money, get non-recourse lending, and infinitely not have to worry about any of the debt that I've taken on.
Okay. Yeah. Yeah. So, and those are things
Thank you,
that you needed to learn on your own,
Yes.
like it's
Because there's no CPA in the world that's going to explain that to you.
no,
You
then
go
that's
sit
the
down
point.
at the beginning of next year and say, here's my K1. I just made $250,000 last year from my retirement account. They're like, well, what do you mean? They didn't even understand what a syndication was. So
No.
again, I noticed somebody, I think maybe it's Tim, that said that not all CPAs are created equal. And this was, a tax attorney. So you would think they would have a higher level of looking at K1s, not only in your personal income, but also in your retirement account. And they had no clue. So it's frustrating. You have taken on
tax strategy is not their job.
No.
Tax
But you learn it
strategy.
after the fact.
They are there just to keep you out of trouble, basically, right? They're
Well,
going to take
it's-
what I had some very basic, but last year my CPA is like, yeah, you just bought a new house, all right? So you're going to use your home office. We're going to write that off now, right? And I'm like, yeah, dude. I mean, what do you think? It was like, this is silly stuff right here, like basic, right? But as a short-term rental agent, there are multiple, I mean, obviously the tax thing is what we're talking about today, but for me, it's a strategy that you could continue to make income forever. You can leverage this business enough where you can then hire someone to run it and still continue to pay you over time. So, you don't have to be active in the business after it's already set up. You could still manage it. It's a certain number of hours a year to manage that thing and still be in the game. So, short-term rentals, you can start with rental arbitrage, like rent a property and put it out there and make some income. That doesn't give you a lot of depreciation, but at the same time, it's, you can leverage your way into that without, anything. So, STRs are my thing. If you're out here in the Shenandoah or wherever, just, bring it. Let's go.
Well, Isabel started by talking about cash flow quadrant as one of the first things that she read. And that's exactly what Aaron's talking to, is like, now you've created a business, you're not self-employed anymore. So by creating a business, you have a passive income stream, as well as, like, you don't have that responsibility of doing that work every day. And you can do the exact same thing through a syndication or something like that, where you're putting your money to work and now your dollars are your employees. So you have, 500,000 employees, meaning dollars, that are working for you every day. And you can still go do your W-2 job. You can have self-employment side gigs. You can be doing those short-term rentals hands-on as you're growing, and then move them over to that other side of the quadrant into, hey, this is passive for me. I can go out and replicate this.
And
I'm
I think
put
that's
a
important.
caveat out here, if I may, and then I want to hear what you have to say, Isabel, which is just this. If you're watching a talk on taxes and you are looking for a silver bullet, you are thinking about this incorrectly. I can make a counter argument of why not to buy short-term rentals very effectively. Been doing it for 15 years. I cut my teeth negotiating the last time the market went belly up and they all had to short sell. And I'm seeing it again. So it's not every asset class is perfect. I think
Mm-hmm.
short-term rentals are amazing. I'm selling them right now. I would buy a short-term rental. And like my biggest takeaway from listening to everyone talk is you need to be thinking about the tax returns, like the tax benefits of this. When Jeff talks about paying 38%, it's because Jeff made such amazing returns off of being involved in syndications that he left his day job as a medical professional and got into investing full time. Like like, so is this, and I don't know if you would have gotten those same, right? You had some amazing returns. Now you got some amazing returns and you're getting good tax benefits, but it's all complicated. It's all nuanced. And like, if you can go on this journey, we got some resources for you. We're going to help you, but it is not just, I've just seen it whenever I think I'm like, oh, this is the new thing. Then you talk to someone else and you start getting into it. And they're like, well, unless you're doing X, Y, or Z.
Mm-hmm.
It's exactly
Mm-hmm.
why you join a group
Mm-hmm.
like Grid, because you're not doing it. You
100%.
get
And
all of that
people will,
information.
and what I would say is I love this is you get on here though, there are people here that are looking to collaborate and they will come from a place of, and I love, Tim, thank you, by the way. Tim, if you're not looking, go look at Tim's comments. Tim dropped a couple great books in there. He had some great questions. He found a great resource for us about, when you were talking about that debt service leverage. So I appreciate you being on here, Tim, and contributing. Thank you. Um, Isabel, what are you thinking, man? We covered a lot of ground. This is not something we're going to cover just in an hour. I love that you opened a conversation, right? And so you designed a course. How long is this course? Is this just because
It's
this is like, I can't give this all in a 45-minute?
It is 6 weeks.
Perfect.
It's a video, and then I also am on calls with the people
Okay.
every week. It's a community, and yeah, I think it's my way to explain this to everybody, or to try to help everybody that is not like is investing thousands, like it's not, they don't have this 500,000 job that they're, like it's people that are starting, and it's the way I would have,
Mm,
if I would have started and someone will have given me that will have been amazing
I
for
love
me.
it. And so it's beginning with the end in mind. It's structuring, it's setting it up. I saw Kim say she helped with entity structure.
She
Uh,
does, she's
if you want a
amazing.
link, she was amazing. I use a company called Relay for all my accounts. We
Hmm.
use Profit First as an accounting system. So when money flows into my main account, I've got 5 accounts
Yeah.
total, right? It sweeps off for taxes, it sweeps off for my profit, operations. Like she did it
Yes.
in a very intuitive way. So
Yeah,
that's for
she
my
did the
cash
same for
machine.
me.
She gave me some great systems, right, to make that easy for me to run that cash machine, to have an easily articulable profit and loss, right? So
Hmm.
I can go build that wealth machine. What was, you know, for people that aren't, I know we're here at 9:30, so I'm gonna go let everyone here get on to your Tuesday. I've got a couple questions, so I'm gonna go into overtime with Isabel. Appreciate you being here. What is, if I'm sitting here right now, I'm making the median income in this country, right? Like at 72,000. I feel like I can't invest, which is, by the way, median income for realtors that have been in the business like 14 years is like 82,000. So once you factor in taxes, we're not your average realtor is doing okay. They're not, the millionaire real
Hmm.
estate agent by any means. Where do I start? Like, what was that starting? Was it just
I
diverting
think
some
I think
money?
this is one of the things that I always have a conversation with the women in grid, that the chapter that I lead. One of our uh m- I don't know, misunderstandings, I think, is to think that we need a lot of money to start investing in real estate. I think that is a mistake that we need to start, like, not thinking about, because like when I got the first deal, I thought I needed a lot of money. And Rob told me, hey, you don't need anything. The money is always going to be there. It's just the deal that you have to find. If you find the right deal, there's going to be people around you, or at least in grid, that are going to be able to lend you that money. So if you don't have any money, I think I mean, I always think the way to start and the way to do everything is leveraging other people's money. And so just starting with a harmony loan, you can talk to Cherie, of course, and like starting with a harmony loan, if you get the right deal, just do it, and if you need, if this is for a short-term rental, or if it's for a rent, or just get the right mentorship, which is what grid is for, in order to put that into place. Grid is a community of people that are going to help you if you're in your real estate investment journey, and I think it's great. That's why I'm a part of, because I love it. I think it's great, and if you're here, if you're in grid, you're gonna be able to put a deal together even if you don't have any money.
No, actually, that's brilliant. I love that, because I was sitting here thinking what my answer would be myself, and it's like, man, would I get really good at my sales activities? And no, it's just being aware of that. The most important piece is identifying the deal. And if I'm a realtor, I'm perfectly positioned to identify deals, and I should be out here so that what I would do tomorrow, if you're here and I wanted to do any of these strategies, would just be going through my database of who do I know and identifying, hey, Isabel, if I found an amazing deal, would you let me participate? Could I have some equity? Could I be a part of it and learn? And it's pretty easy on the front end to get people to agree. So
Yeah,
yeah, of course. Yeah, I'll
with
give
the
you a piece
people
of an
that I
imaginary
know,
deal.
or
Yeah.
even with grid, like even in the community, you can say, hey, I want to put this together, who is there to help me? And I mean, I bet you there's going to be a lot of people that are there to help you.
I love it. If you also, by the way, speaking of grid, go in there. Isabella's in there. She's in the national one. You can tag her if you don't know. Julian will drop it. But there's a grid investor community, a national community. A bunch of our speakers, a bunch of people that are on this call are in there. We'll chat, we'll participate. Love to have a conversation in there. Isabel, thank you for coming here, for sharing with us. I appreciate you being on here today.
Thank
Y'all,
you. This has been
go be
amazing. And thank you,
excellent.
everybody.
Go take some territory today, and we'll see you next Tuesday.
Yeah. Yeah. Thank you, everybody.